Many of our clients are self-employed, and that causes financial problems. But you can make a lot of money being your own boss. Ted and I discuss the pros and cons of self-employment starting in 8 seconds.
This is Debt Free in 30. Here's your host, Doug Hoyes.
Ted, today we are talking self-employment.
All right.
And for those of you watching on YouTube, Ted has no cue cards. I just told him what the topic was 14 seconds ago.
Are we considered self-employed?
Okay. Well, there's an excellent question. So, what is your definition of self-employment then?
Well, so self-employed, I guess, is you control your own hours of work and when you work and what you work and who you're working for.
Yeah, my definition is anybody who isn't an employee who gets income. So that's a pretty bad definition, I guess.
So we're employees, then I guess we're not self-employed.
Well, we are employed by a corporation, Hoyes, Michalos and Associates, Inc.
Right.
We are the shareholders of that corporation. We're the only two owners of it.
So we have two different roles.
So I guess sort of we're self-employed, but we're
it's more complicated.
It's more complicated than that. Now, there is a point to all this, but let's go through kind of the big picture here. Yeah, well, so let me ask you that question then. So who do you run into, what industries, what types of jobs where they are more likely to be self-employed?
Well, so probably the most common are truck drivers, and then maybe registered massage therapists.
Oh, I didn't have that on my list. Good. Okay.
Hairdressers.
Yes, I got that one.
Real estate agents.
Oh, real estate. Didn't have that one either.
Uber drivers.
Yeah.
Because I'm not convinced any of them make any money after tax. But
that might be true. Okay, you've missed a big one.
What, say construction guys?
Yes, construction guys.
Yeah, that's a special category of stupid, I think. People aren't going to like what I have to say about that.
We'll talk about that. What else did you have?
Your gig workers, right?
Yeah, gig workers. You call them jig workers, but
I do that on purpose.
I know
folks.
you do.
Yeah.
So IT professionals, very common to see them as self-employed. Why is it that someone would become self-employed?
Well, it depends on if it's their choice or the person employing them choice. So that's going to get confusing too. What do we call the people that are purchasing their services as opposed, let's not call them employers because that'll complicate things.
Well, but I know what you're saying. The person, the
who's
person
using
who
their
contracts you.
Yeah.
So, and you're right. The first thing I had on my list was, why would someone become self-employed? Because they have no choice. It's out of necessity.
They're told that's the only way they're going to employ.
That's the way it's going to be.
Right.
So give me a scenario. I'll give you one and then you can give me one. So you will recall back, 25 years ago when we started this little adventure, that one of the projects I did for about the first year we were in business was working at a trucking company.
Right. I used to do that for a living.
And we talked about that, I think, a couple of shows ago, that you were a truck driver for 5 years. So this trucking company was in financial trouble, which is why I was brought in. And one of the ideas they had the year before I got there was, hey, we'll take all our truck drivers who are employees and we'll make them independent contractors.
Right. And
so instantly, boom, you're now an independent contractor. So we're not paying you CPP or EI, you're now a contractor. Of course, CRA said, no, that's not going to work. So they said, okay, no problem. We're going to have all of you set up your own corporation. Right. Now you're an independent contractor. And we're going to talk about the CRA definition of all this. But that was a case where they said to the guys, hey, you know what? You want to still work here, you got to be self-employed. Where else is it out of necessity that you are pushed into it?
So think of the number of guys that open little landscaping companies. They got a pickup truck and a lawnmower, and they decide that they need some help. But instead of putting them on payroll, I'm going to treat you as a subcontractor. So if you want to work for me, that's the way you're going to work.
It's just the way it is. So CRA has a bunch of definitions as to what is
specific criteria.
Yep. So you don't have the list in front of you, but you start telling me what's on this list here.
So the first is who has control of the risks and the rewards. So if somebody is doing a job and somebody else is getting all the benefit from it, then there's a good chance that they're an employee, not a subcontractor.
And in fact, those two words pretty much is the whole definition right there. Right. Control and risk. Yep. Control and risk. And so I will put a link in the show notes to the page on CRA's website that explains this all. But
they also say who owns the tools, right?
Yeah, and which kind of goes to both control and risk.
And who sets the hours.
And who sets the hours.
Which is also control.
So indicators showing that the worker is an employee, and this is directly from CRA's website. The relationship is one of subordination.
Right. So that means that I tell you what you're going to do. You have no control over it. You got to show up when I tell you. You got to go where I tell you. You got to do what I tell you. So you're not a subcontractor.
Right.
You're an employee.
You're an employee. The payer decides what works you're going to do, makes the final decisions and so on. So indicators showing that the worker is self-employed, well, it would be the opposite of that thing.
Right.
So
I've got a job that I need done, and I say, Doug, I need this job done by next Friday. Here's what I'm going to pay you to do it. So you decide what the materials are, who the staff you need, when you're going to show up on the site, the tools and equipment, you do all of that stuff. An IT guy, it's perfect. I need a module or I need a subroutine, an application that does this. I need it delivered by the end of the month.
Yeah, how you do it, I don't care. What hours you do, I don't care.
Yeah, what you use, I just want it.
What software,
here's
I don't
what
care.
I'm going to pay you for it.
You do it and you get paid.
Right.
So that you're a contractor in that specific case. Now, of course, the lines get a little blurry.
They certainly do.
So, okay, I want you to create this software for me, but it has to do this and it has to integrate with our other thing, and you're going to have to meet with our people to figure out how to do it. So I'm going to tell you a bunch of stuff.
Right.
So are you a contractor or not? Now, back to my trucking example, what they did in that case was they said to all the truck drivers, you got to form your own corporation.
Right. And that passes a huge test for CRA because suddenly you've got this legal entity. There's one legal entity, the trucking company, hiring another legal entity, the driving corporation. So, I mean, that's on the surface, that sure looks like it's two separate businesses.
Yeah, and I believe, I'm not 100% certain of this, but I'm 90% certain that a corporation cannot be an employee.
Right.
It's a corporation. Now, that doesn't mean there's no rules and standards and anything, but that's pretty good evidence. So you are an employer, as am I. Why would an employer want someone to be an independent contractor as opposed to an employee? What's the advantage for an employer of having an independent contractor?
So first and foremost, there's this perception of flexibility. If you don't actually work for me and I suddenly don't have any work for you to do, I'm not worried about severance or anything else. It's okay. Sorry, I got nothing for you. I don't have to pay you if you're not doing any work. If you are doing work for me, I still don't have to pay things like source deductions, EI, CPP premiums. I don't have to give you a benefits package. So there are a lot of costs that are automatically reduced. And on top of that, there's the administration of having an employee. The more employees you get, the more specialized staff. You need an HR manager. You need a payroll person. It starts to add up.
Well, and you've hit on the key area here, right, which is the source deduction. So as an employer, what are you required to take off a person's paycheck?
Well, at the very minimum, their EI and their CPP premiums.
And as an employer, you have to contribute to both of those as well.
That's right. Trying to remember what the matches are now. Is EI double?
Well, I think one of them, I think it's a base, and then one of them is 1.4. Again, right. We don't do any show prep, so we can't tell people what the exact
and we don't actually
are
process our payroll because nobody'd ever get paid.
That's right. We have people who do that. But thanks, Jennifer. But yes, as an employer, you have to also contribute to CPP and EI.
That's right. They're matching fees.
They're matching. So if I hire you as an independent contractor, here you go. Here's your money.
Yeah. So I don't have to pay the matching, and I don't have to process the payroll the same way. So there's a whole reporting criteria for source deductions that you don't have to do.
Yeah, you have to do a T4 at the end of the year. You got to do all that kind of stuff.
Right.
When you hire a plumber to do work at your house, when the job is done, here's a check.
Right.
I'll e-transfer you the money. That's it. I don't have to fill out any forms. I don't have to do anything. There's no additional reporting. So it is easier for an employer to have an independent contractor. Would you agree with that, or have I overstated that?
Easier as long as you need the flexibility and the cost savings that we're talking about. At some point, it's more important for the employer to have access to that person all the time and when they want them. And so now it's the employer's advantage that you are an employee, because then I can set the hours of operation, what exactly you're going to do. You can't tell me, sorry, I can't do it today because I'm going fishing with the boys. Sorry, if you're an employee, you're expected to show up to work.
Well, and if I'm a IT professional doing computer stuff, right, if I've got other clients,
Right.
So I'm going to go work for that other guy today.
IT is a great example because if our system breaks and our IT guys don't show up to fix it, we get pretty angry.
Right. We got a problem.
Mm-hmm.
And so as an employer, the flexibility is nice, but the downside is, if your person isn't there, then you got a problem.
Right.
And because they're not an employee, they can leave anytime they want.
Right. And the street goes both ways. You don't have work for them, then you don't have to bring them in. But if they've got a better offer from somebody else, well, they'll go work for somebody else.
So we understand why an employer would perhaps want to have someone as a self-employed person.
Right.
And as we already went through with those criteria, if you were to say tomorrow, okay, staff, everybody is now a self-employed person. I'm not taking off CPP or EI. I suspect CRA would have a problem with that.
Exactly.
Because of all those tests you said.
That's right.
I mean, our office is open from 8 till 6. Someone is answering the phone. Someone is here. We can't have employees just deciding what times they want to answer phones. They have to use our software. I mean, everything has to be done together. So if we were to just say they were self-employed, it wouldn't work.
Correct.
It would not fly. It would not pass muster, as they say. Okay, that's from the employer's point of view. Let's flip it around. The person watching today is thinking, I've always thought about being self-employed, and maybe even my boss has suggested I become an independent contractor, form my own corporation, whatever. Right. What are the advantages to that person, the employee, to be self-employed?
Well, first and foremost, there's probably a higher rate of remuneration.
Money.
Right. So they're going to pay you more to be a self-employed person, whether it's an hourly rate or the contractor, however they work it. Generally speaking, self-employed people are collecting more money up front. Now, there's an offset to that, of course, that they have expenses that they get to deduct. So for tax purposes, they might actually be making less money. So two people doing the same IT job, one's an employee at $50,000 a year. One gets to build a company at, $150 an hour. At the end of the year, once the guy who's billing at $150 an hour deducts his home office, his car, his computer, and all that stuff, might actually make less money for tax purposes than the fellow who had the paid salary job.
Well, but the flip side is they're getting all those deductions that the employee doesn't get.
Well, but they're both paying the same things. One guy gets to claim them as deductions, the other guy doesn't.
Yeah, they both have a house that they live in.
Right.
So the tax so let's talk about the more money first of all.
Right.
So the employee is getting paid $25 an hour. The independent contractor, as an employer, I'm going to say, well, I'll pay you $25 an hour too.
Right.
But the independent contractor will say, no, I'm not going for that because
I got no benefits. I got no unemployment insurance. I got my own costs and expenses I got to cover. It's got to all be built in.
Well, and when I do my taxes at the end of the year, I got to pay CPP.
Right.
You're not kicking in for it. So, okay, so the advantage though is you could make more money as a self-employed person.
On the surface, it almost always looks like you are. You're grossing a much bigger number.
Well, there's no taxes coming off your check either.
Right, that's the biggie.
So absolutely you're grossing more, and we'll talk about the pitfalls next. There may be some tax advantages, and I guess freedom.
Right.
Would be the other big one.
The illusion of freedom.
The illusion of freedom.
Anybody who's self-employed say, well, I work for myself. No, you work for your customers. And if you don't work for your customers, you won't be working very long.
Right. And so, yes, if your customers need you at 12 noon on a Tuesday, well, I guess you better be available at 12 noon on a Tuesday.
Right.
That's kind of how it works. So, okay, we all can see then the advantages of being self-employed. I get to set my own hours, do my own thing. I can probably make more money, certainly up front from a cash flow point of view.
Right.
Maybe there's some tax advantages too. If I got my own corporation, well, I can employ my spouse and my kids and my dog and my next door neighbor and everything else.
Depends on how creative you want to get.
Yeah. We're not saying any of this is legal. But these are the perceived advantages. Okay, right. So now let's look at the other side of it. What are the risks? What are the disadvantages of being self-employed?
So the biggest single risk to anybody starting up as an individual becoming self-employed is that you can do the work, but you can't manage the business. And so by that, I mean you've got obligations if you start becoming self-employed. Well, you don't have any CPP deducted, so you got to pay twice of it at the end of the year. You got no tax withheld, so you got to make installments throughout the year. You've got to make sure that you're in compliance with all the various laws that relate to running a business.
Well, and that's a huge point that a lot of people don't consider. So we work here at Hoyes and Michalos and Associates, Inc. If your computer doesn't turn on this morning,
right,
there's a guy you can call to say, hey, my computer doesn't turn on this morning. If you're a self-employed individual, I guess you better figure out how to make your computer turn on.
Or get out there and buy a second one.
And, well, so there's the next disadvantage then.
Right.
The risk of, well, you're paying all the costs. So your computer breaks, you got to buy a new one. The truck you use to do your landscaping business, it breaks, you got to fix it. So that's a significant one. And back to this, the whole tax thing, because
well, the tax thing gets more small businesses in trouble than anything else. So maybe you're really good at doing the landscaping thing, but you can't keep bookkeeping records of your business worth crap. I mean, it's not your strength.
So what do I need to know then and I'm talking specifically about taxes and bookkeeping and that sort of thing.
Yep.
So I'm going to become self-employed. I've been an employee. I'm now going to get my truck and get a lawnmower, and I'm going to start my landscaping business. What are the things I need to know that I didn't need to know before? Well,
presumably you got to register your business with somebody somehow. So you can't just say I'm Doug's Landscaping and start cutting people's lawns. If your sales volumes are going to be high enough, that registration is going to require sales tax, right? HST, excise, whatever you want to call it.
And so let's talk about HST then. So in Ontario, it's 13%. Mm-hmm. So that means when I charge you $100 to cut your lawn, I've got to collect $113.
That's right. Either that or you're not really getting paid $100. You're getting paid $88.50.
Because I'm going to have to remit it anyways. And then what do I do with that $13?
Right. Well, so you're obliged to collect that on behalf of the government and then remit it to them. What happens with a lot of people is because the government isn't there every month saying, you need to give me my HST money or you got to give me my income tax installment, they don't get made. And so at the end of the year, you suddenly discover, oh, crap, I didn't make any of these installments and you owe money. Well, you stick your head in the sand and say, I'll just ignore it because the government's not yelling at me. Second year comes along and you haven't done it now and you've got a much bigger problem. And eventually the government is going to catch up with you.
Eventually. So how often do I have to remit HST? Every day I collect it?
Depending on your volume, you can be an annual filer, which means once a year when you file your taxes. Actually, the HST has to be filed by January 31st. You have to file the actual return, but if you owe money, you're supposed to pay it at the very least quarterly. Otherwise, they charge you interest and penalties.
Yeah, and so the answer depends on the size of your business.
Right.
So here at Hoyes Michalos, we are a monthly filer.
Right.
So every month, and I do it personally myself because I'm an accountant, I fill out the form. It's on the computer, but I'm motioning with a pen as though I do it on paper. I file it and I pay it. So every month we're paying it. You're right, though. You could be a monthly filer, a quarterly filer, an annual filer. It all depends on what level of revenue you're generating. Do you know what category your business fits into? Well, you better, right? Because you're the boss. You gotta figure that out.
Well, and more importantly, even if you don't know, make sure you're setting it aside someplace. It's just so easy. You leave it commingled in your bank account, and something goes wrong, and that's the money you spend first.
Yep. Well, and my advice to everybody is even if you are an annual filer, you can still actually send them in monthly or quarterly.
Right.
And even if you don't send in the return, you can make an installment payment send it in. You want to get that money out of your hands. So HST is one example of something an employee does not have to worry about.
Right.
But you have to worry about if you're self-employed. Are there any other things you have to worry about when you're self-employed that you don't have to worry about when you're an employee?
All those things that you're claiming as tax deductions, expenses, you got to keep track of. So an employee doesn't get to claim their home office expense, their internet, their cell phone. As a self-employed person, you may be able to, but to do that, you got to keep detailed records.
And how much am I able to claim?
Right. That all depends on how much you're using them.
Well,
so car's a good example.
Yep.
Car, you're supposed to keep mileage, two mileage records. One is your total mileage, and the other is mileage used to generate income. If you get over 90% of mileage used to generate income, the whole thing is deductible, but for most people, that's not what happens. So maybe you get to deduct 3/4 of your car or 2/3 of your car, or maybe you're working from home all the time. You don't really incur any miles for the car.
Yeah. And so how do I keep track of my mileage?
Well, you got to keep some kind of log.
So I got to have a log book or something or something.
Excel spreadsheet somewhere, someplace. You got to keep a record because at some point, with all new businesses, sooner or later, usually within the first 3 years, Revenue Canada reaches out and says, I want to see your records.
Right. And so I'm allowed to deduct a bunch of things. So if I'm the IT professional who drives around to different places and fixes their computers, I can deduct some of my car expenses.
Yep. You're going to have a home office. You're going to deduct your computer. You're going to deduct your internet hookup. You're going to deduct your phones. There's all sorts of things that are legitimate expenses because you need these things to generate that IG income.
So I live in an apartment. I pay $2,000 a month in rent. I work from home. How much can I deduct?
Well, the law says it's whatever space you use explicitly or specifically for the business. So if you've got a one-bedroom apartment, it's pretty tough to say, I use the bedroom, because that means you can't sleep in there. If you have a two-bedroom apartment, you could say, okay, the second bedroom is my home office. If you just put your laptop on the coffee table in front of the TV, it's pretty hard to deduct the living room because you use it for other things.
Well, if I have a two-bedroom apartment and one of the bedrooms is set up as an office, then I'm supposed to take the square footage of that?
That's right.
But I would argue there's two bedrooms. I use one of them for business. That's 50%.
Right? You could try that.
Because I still have to use the bathroom when I'm working. I still have to make myself a coffee.
And all of this depends on how aggressive you want to get with your taxes, and that's a conversation to have with your tax accountant, not with us.
And that's really my point here, that it is not cut and dry. It is
Never
not,
is.
There's exactly how you do it, and this is how it works.
Yep.
What if I work from home 2 days a week and I'm at my client's business 3 days a week? Well, do I deduct 2/3 of whatever the percentage would have been? How does that work?
Right.
These are questions that you need to discuss with someone who is more competent than we are. And you've got to understand the risks of doing it. Because as an employee, you get a T4, you put it on your taxes, you're done.
Right.
There's no risk, nothing to it. So there's a bunch of tax consequences. And just on that point about CPP, I want to emphasize that again. Right. Because as an employee, CPP gets taken off every paycheck.
And your employer pays another
portion. And your employer's
portion.
kicking in. But as a self-employed person, when you file your taxes, the government says, oh, you didn't put anything in. You have to put the employer and the employee's portion in.
Both have. So it's twice as much.
You're paying double. So that's a big number. And then there's the issue of installments. So what are we talking about with installments?
So again, it's basically depending on how much money you earn at the end of the year, the government's going to say, well, if you haven't had taxes deducted at source, and as a self-employed person you won't, you are required to make installments. Whether they're, well, in most cases, they're quarterly. And so they'll give you a schedule that says, well, last year your taxable income was $100,000. You didn't have any tax taken off at source, so we expect you to pay $25,000 every quarter this year. And if you don't, and your income ends up the same, you'll have interest and penalties and all sorts of other things that go on.
That'd be 100% tax rate if you're paying $25,000 a quarter on $100,000 in income. But I see your point that you
scared you though.
I know it did. So now you're right. What the computer at CRA does is it says last year you should have paid this much, or this was your tax. So we're going to assume it's the same this year.
Right.
Well, if my income's going up this year, I should be paying more.
Correct. And if your income's going down, you could argue that you could be paying less. Difficulty is, depending on the nature of your business, that schedule that CRA is going to give you is going to say, this is what we want every quarter. Maybe you make all your money in 4 months in the summer, right? They still expect you to make some installments. Otherwise, you're going to be charged interest and penalties.
Yeah. So pay them early.
Right.
Now, we just talked about CPP. The other one is EI, employment insurance.
Which you're no longer eligible for if you're self-employed.
So explain that.
So employment insurance is designed for the individual that, through no control of their own, they've lost their job, whether they were laid off or shut down or even a mat leave, something like that. The government compensates you because you're not able to work. As a self-employed person, you're not entitled to that benefit because the government just assumes you could decide not to work, and why would they pay you a benefit for that?
Yeah, so which is exactly what you do. Okay, so I'm going to work for 4 months, and I'll take 4 months off, and then I'll work for 4 months. I'll just keep alternating. So the government says, no, if you're self-employed, there is no EI. So
you don't pay the premium.
You're not paying into it,
right?
But you can't collect it.
Correct.
So that's a big shock to people.
And it's a big risk.
I
mean, the EI doesn't ever pay anybody enough anymore to live in our society. I think the max right now is $2,100 a month. And where I live in Guelph, the average rent for a one-bedroom apartment is $2,100 a month. So if you're on EI, you got real problems. But if you got nothing at all, you got really big problems.
So what am I supposed to do as a self-employed person then?
Well, you got to make sure you set some money aside for a rainy day. You've got to, if you know you're going to have peaks and valleys in your income stream. So I make more money in March and April, and then I make a lot of money in October, November. Well, then you got to make sure you set money aside for those months where you make less money. So there's nobody helping you.
So let's start the practical advice segment then. That's number one. You've got to have a much bigger cushion, a much bigger buffer.
Right.
Because number one, you're responsible for generating all your own revenue. So if that company you're contracting with says, oh, we don't need you.
Yeah, if you have one customer I mean, it doesn't look good to CRA either if you only have one customer. If you have one customer and they suddenly decide they don't need you, you're out of luck.
Yeah, if you're a hairstylist and you have 100 customers a month, well, if one of them leaves, no big deal. But yeah, you got one customer, which is often the case, then poof, you're out of business.
Let's use the landscape guy. So I've got a pickup truck and a couple of lawnmowers, and suddenly there's 3 other guys in the street doing the same thing for less than you because they desperately need the money. Well, you're in trouble again.
Yeah, if some high school kid, well, they can undercut you. They don't have a truck. They just borrow your lawnmower. And
they don't have a mortgage.
Yeah, they have no, they're not paying taxes
maybe they do,
on it.
I don't know.
Yeah, a lot of kids do these days, I guess. So I think, yeah, practically, number one, you've got to have a much bigger buffer.
Right.
I would say that things like taxes, you should be paying monthly.
Well, I mean, I'll take that a step further. If you're good at doing something and you can turn that into a business, great. I think you really got to pay somebody, a bookkeeper, an accountant. Someone's got to be responsible for making sure you're meeting all the legal requirements that go with doing a business. And we don't provide that kind of service, so I'm not trying to sell you anything here, folks. But the self-employed people that get in trouble, it's because they look after the customers, but they don't look after the business.
Well, I had a previous boss who used the phrase, if you're going to be in business, you got to be a maker, a seller, and a scorekeeper.
There you go.
So you're obviously a maker. You know how to cut the person's hair. You know how to cut lawns, whatever it is. You're good at that. But do you know how to sell?
How do you get that next customer?
How do you get that next customer? Do you know how to advertise, market, all that kind of stuff? That may not be in your skill set. Scorekeeping is the other one, which is the whole accounting function.
Right.
It's very rare that someone is a fantastic salesman, a real people person, but they're also a real, numbers-based accountant. It's just, those are two different sides of the brain, right? So, okay, I'm really good at hanging drywall, but not good at this other stuff. What do I do?
Well, you find somebody that is good at that other stuff that you can afford to hire for their services because they're self-employed too. They can't hang drywall, but they can probably do your books.
So partner up with that person or hire an accountant, hire a lawyer, hire an HR person, whatever it is you need to do.
Recognize the things you don't know how to do and find somebody that does.
And over time, maybe you can learn some of those things.
Maybe.
So if you've never filled out a GST return before, okay, I don't know how to do that. But once you've done it, it's like 4 lines. It's not that hard. It's a quarter of a page.
Return's not the problem. The problem is keeping track of all the inputs and outputs of the expenses.
Yeah. And my advice to everyone in that situation is before you set up your business, sit down with an accountant, a competent one.
Right.
And say, okay, what do I need to keep track of? How do I do it?
What's it going to cost?
What's it going to cost? So, I mean, I don't know if I should say this on the podcast or not, but Hoyes and Michalos, which has been in business for almost 25 years, our accounting system is a spreadsheet.
It's very sophisticated, though.
Very sophisticated spreadsheet. That's actually not that sophisticated at all because ours is a simple business.
It's a cash business.
It's a cash business. We don't have inventory, receivables, fixed assets, anything like that.
Right.
Depending on what your business is, a spreadsheet may be fine, maybe a simple accounting program, maybe some app on your phone, whatever. But you got to set that up before you start.
Right.
Or else you're toast. Because you come in, it's the end of the year, you go to the accountant and say, can you file my taxes?
Here's my box of stuff.
Here's my box of stuff. Okay, well, we can't do anything. So I think paying the money up front to get some advice is very important. Should you incorporate or should you not? Well, we're not going to talk about the pros and cons on this show, but that's something to be thinking about as well.
Right. And there's a cost associated with it both ways.
Mm-hmm. There may be benefits, there may be costs. So you got to think of all those kinds of things up front. So practical advice, get a good accountant, probably talk to a lawyer before you start as well. And I understand you got no money. You're just starting out. The reason I'm starting this self-employed thing is because I lost my other job. I've got no choice. And now you want me to spend money on accountants and lawyers? Well, you don't have to, but you are taking a risk not getting the advice up front. Having a larger emergency fund, I think, is the other huge thing.
You got to have a contingency.
So as an employee, like you said, okay, maybe if I get laid off, I'm going to get a bit of severance and then I'll get a couple of grand a month on EI. So long as I got a couple of grand in the bank, well, I can cover my rent for a couple of months. I'm okay. Right. But if I'm self-employed, poof.
You got nothing coming in.
I got nothing. So I'm totally toast. Okay, what final piece of advice would you like to give someone who is watching this show and while you're thinking they're obviously clicking the like button? Is everyone doing that right now? And the subscribe and everything else? We're over 9,000 subscribers on the. What is your advice to someone considering should I be self-employed or not?
If you're an employee and your employer is telling you that they want you to become a self-employed contractor, you got to look at it twice, because there's probably more advantages to them than there are to you. There's some underlying reason why they're switching this at this time. If you have a skill set, a job function, there's something that you do that you know you could make a living at, and so you'd rather make the profit, the extra money by doing it yourself, then recognize that just because you're good at doing the building thing doesn't mean that you're good at the business thing.
So evaluate your strength and weaknesses.
What's the old saying? Nobody ever plans to fail, right? They fail to plan.
Yep. Yeah, and you've also got to have the capital required, the money to do this.
Well, that's a whole different subject to how many small businesses fail because they're undercapitalized.
And it's a lot. And so if you're going to be the landscaper with the truck and the lawnmower, you got to be able to buy the truck and the lawnmower.
Right.
Or finance it or whatever.
And you got to pay the bills, because not all your customers are going to pay as soon as the work's done.
Yep.
Some of them will pay you 30, 60, 90. Some of them will never pay you.
But you still got to put gas in the lawnmower tomorrow.
That's right.
So having adequate capital is pretty important. My final piece of advice would be to ask yourself, so all the questions you ask, but also, do you have the mindset to do this?
Right.
Because it's totally different being the guy as opposed to being the employee.
Right.
So you and I were at a business meeting a couple of weeks ago. We won't discuss what it was all about because it doesn't matter. But
I won't let it slip.
We won't let it slip. But the person who we were meeting with was telling us about one of their employees who was very good at a specific clerical function.
Mm-hmm.
And this person said, I've been trying to get that employee to, move into management, do other things. But no, she's very happy doing that very specific thing.
Yeah, she knows what she likes, and she knows what she's good at, and she knows what she wants.
And she has no stress.
Right.
She works 9 to 5. She does her job. She's twice as good as anyone else doing that job.
Yep.
And she's perfectly happy. She is a fantastic employee, the kind every employer would want.
Right.
But she would probably be a disaster as a self-employed person. Maybe. I don't know. Never met her.
Right.
But maybe a disaster because, okay, now I got to think about all these other things.
Right.
So if you're the kind of person who likes to come to work, do your job, go home, not worry about it, then you should be an employee.
Makes sense.
But if you're the kind of person like you and me, I mean, the reason I'm self-employed is I'm not good with authority.
The reason we're self-employed is because the other idiots were just doing such a poor job.
Well, and that's it, and we were.
We'll edit that part out.
We'll edit that part. I mean, we were in our history. I mean, I've worked for some great bosses.
Yep.
But I've also been in organizations, the big accounting firms, where it's like, well, you know what? I can do a better job than the guy above me.
Right.
So I'm going to do it myself.
Mm-hmm.
And that way I don't have to take orders from someone who I don't perceive knows what they're doing.
And in our line of work, the people above us didn't want us to treat you like human beings. They wanted to, we want their money, but we don't actually want to see any of these people.
It's a factory, right?
It didn't make any sense.
Right. So as a result, our mindset was we are entrepreneurs. We are self-employed people. We want to help people the way we want to help them. And so we had to do it as a self-employed person. But we went quite a few years there where our income was really low.
Well, the first year we were in business, I got the HST checks.
There you go.
T4 slip was $6,600.
Right. And this was after being in accounting firms where we were making more than that. I was getting the GST credits, back in the day.
Right.
So there's a financial risk, and you never know if it's going to work. And should I open an office or not? Should I hire that person or not? How do I know I've got enough money at the end of the month to meet payroll? If you can't handle that stress, you should not be self-employed.
Right.
So I think my advice is understand your own mindset, and then if you think you can do it, okay, plan.
Plot it out
so you know what you're doing. So there you go, the pros and cons of being self-employed. And the reason I wanted to do this show is because, as Ted said earlier, a significant number of our clients are people who became self-employed, perhaps not through their choice, they had no choice, and they ended up not getting taxes filed, not getting money paid, and they ended up getting into financial trouble. So if you can avoid that, that would be good. As I said, I will put a link in the show notes to the Canada Revenue Agency definition of self-employment versus employment. It's a good thing to read if you're trying to understand what we're talking about. So I will put links there in the show notes. As I said earlier, if you're watching on YouTube, please like, subscribe, hit all the buttons. A new podcast comes out every week on the audio version as well. So again, subscribe on whatever your platform is. That is our show for today. Thank you very much for listening. Until next week, I'm Doug Hoyes. That was Debt Free in 30.